Welcome to the Vital Dawn podcast for Friday, September 3rd. U.S. equity futures are trading up small, so you have the S&P futures up about 7 points. That's 15 basis points. Dow futures are up a similar percent, up 49 points. That's about 14 basis points. The Nasdaq futures are up 11 points. That's about 7 basis points. So mild gains in U.S. equity futures. Major European indices are down about 10 basis points overall. You're really not seeing any major movement in the various different subgroups in Europe. None of those subgroups are up or down more than 20 basis points essentially. So very slow morning in the US and Europe ahead of the jobs report at 8:30. Just quickly, that jobs report will really be the only major event on today's calendar. I think for the last week plus, there's been this sense that the jobs report is going to be this Goldilocks number whereby it will be weak enough to ensure an extremely slow taper, if not a taper delay, but not so weak that it will create, increased anxiety around growth. I think there perhaps was, some validity to that view back when the forecast was at 900,000. The print forecast has since descended down to about 700,000. And I think whispers are much lower than that, perhaps, 500,000, if not below. So the setup into the actual print today, I don't think is particularly favorable just because, the number's not going to look as weak against the actual expectations at this point as was the case about a week ago. And I also think that the bar for not tapering is very high. So even if you were to see a figure, even as low as 350,000, I think the Fed is still gearing up to taper quantitative easing. Again, this is simply cutting the pace of monthly purchases. And if you begin the process now, you're still not going to finish until the middle of next year. So these were emergency measures, put in place during the pandemic. While there is still lingering effects from the virus, I don't think anyone can say that conditions now are as negative as they were last year. And so it's completely appropriate that the Fed would begin mildly reducing the pace of monthly purchases. So for those two reasons, I don't think the setup is particularly favorable into the jobs report today. Like I said before, that really will be the only major event on today's calendar. Asia was more active than the US or Europe. Japan in particular, so Japanese stocks rallied. You had a surprise resignation of the prime minister overnight. There has been a lot of political chatter in Japan over the last week, 2 weeks, about whether or not the prime minister was going to be dissolving parliament and calling elections. The prime minister a couple of days ago came out and denied that, and then overnight he resigned. So he was only in office for about a year, not a particularly powerful prime minister. But the chatter is that someone new could do a more effective job against COVID, someone new could come in and adopt fiscal stimulus, et cetera, et cetera. We'll see if the rally lasts more than just a couple of days. But Japan was very much in focus on that prime minister news. That was, the biggest macro headline overnight, but it's very specific to Japan. It doesn't have a lot of implications for other countries. Chinese stocks took a breather, came for sale. There's some headlines about how Alibaba yesterday morning in the U.S. announced this kind of common prosperity financial pledge, about how that news was negative and caused some selling. I completely disagree with that view. You've seen a lot of Chinese companies over the last 2 weeks or so come out and announce similar types of measures, either explicitly endorsing the common prosperity pledge, the common prosperity agenda of the Xi government, and or unveiling kind of financial measures aimed at endorsing that agenda. So I think investors very much are in favor of that. They're very much welcoming companies coming out and, again, getting on board with that agenda rather than fighting it. I think China just saw some profit taking overnight. Chinese stocks have traded very well over the last several days. So I don't really read much into the price action today, although you did get another negative Chinese data point, economic data point overnight. The Caixin Services PMI tumbled in August. I don't think completely surprising. Most people at this point know that given the various different COVID lockdown steps that China implemented last month, that was going to weigh on growth. But obviously, nevertheless, still a negative. Also, too, on the policy front, there has been this sense that because of the slowdown in Chinese growth in the month of August, that there would be some types of steps by the PBOC to kind of stimulate growth. And you really haven't seen that either. There was chatter, at least for the last week plus, that you would see an imminent RRR cut that hasn't arrived. And then the PBOC actually just a couple of minutes ago came out and said that there will not be a sharp turn in monetary policy. I don't really think that should be too surprising to many people. The PBOC has been signaling that, to the extent they do anything, it will be more kind of pulling some levers at the margin, focus more on liquidity, not really easing policy rates. And so that kind of they formally kind of just said that at 5:15 a.m. So that, there could be some incremental selling in the Chinese ADRs in the U.S. today. Again, I think a lot of that is simply profit taking. For the most part after a pretty strong rally. So that is pretty much it as far as macro news is concerned. There were a bunch of earnings out last night in the U.S. I'm not going to run through all the details right now. Avago was interesting just because, the Avago results were decent. The guidance was fine. On the call, the CEO made an interesting comment just about the state of semiconductor inventory. That I thought was pretty negative for the overall industry, not necessarily for Avago. So I have more details on that in the piece. Alaska Airlines came out with a Q3 update. They trimmed guidance slightly. I personally actually think it was kind of encouraging, given that, most people assume that the airlines were going to be seeing some headwinds over the summer, given the Delta variant. Other airlines, including Southwest, have come out and acknowledged that. But the Alaska guidance cut was very modest, and actually kind of took that as a positive, just given again how small it was in light of all the COVID negativity. Visa, MasterCard were very heavy yesterday. There are a lot of questions around why the payment stocks were trading very poorly. I have a piece, I sent around a piece yesterday talking about that, so check that out this morning. It's up on the website. And that is pretty much it for today, Friday, September 3rd. Thank you, everyone, for listening.